Welcome everybody, it's the Market Sniper. Quick recording on HVF method and how you maximize gains in a environment where we are in a macro bull. However, we're coming up to a key fundamental event involving the Fed. And this is silver, the chart, on a low time frame. And I'm just going to demonstrate to you the value of the method in a small, I suppose, learning session that you would get normally if you're in our community, and you would also get the trades. We've just done an ad hoc chat with the community about the precious metals markets just before the key Fed decision and all that's gone on, and some people wetting the bed about a bit of a pullback on gold, etc., etc. I'm just going to handle silver and this relatively low time frame on M30 to give you an example of the kind of stuff you could be getting, the kind of updates you could be getting, the quality, and also the impact it makes on your decisions in terms of how you will maximize. Remember, there's many of you just stacking and looking for gold and silver to be all you need to do. There is opportunity to have more gold and more silver by maximizing this bull market, which is a long way from over, despite what people may say. Okay, let's have a little look at what we did. So you've been in a broadening structure. You'll see this these big outline level lines that I put here. First of all, and I'll be referring back to them. And of course, you will learn about splitters from us. It's something we do with all our broadening and tightening structures. You were previously in an up move, by the way, from here to here. So you're on a bull pole. So I just wanted to give you context of where you were on silver. Most of you know about it and are into the precious metals. So let's just deal and talk with what's actually happening. So this little upside HVF structure was very good. And that gave the purple dash line, which is our line of choice for the second interim target. There you see it. You came back and you supported on it. Don't be confused by this blue line. That's an entry we made. We'll get to that. That took place over here. What happened is this is typical classical flag-based continuation. And of course, it occurred at our second interim, so the rest and the pullback. And then you melted up to target. So there you have first silver HVF on quite a small time frame that's already now performed to target for you. So it goes kind of like this. This is how you would have maximized and gained more silver and gold ounces, for example. Let's put the boxes on there. Where do we get them from? Draw tools. So there you are. Let's take the magnet off. You're in long there, and you're out there on a closed target. Okay. Then what you find is that you're now in progress decay. You get more increased volatility. You get a surge and a dump. And then you go here, and then you go there, and then you start to square up and get tight, and you form the next squeezy, Japanesey, as we like to say. And you're actually getting a fractal, a smaller version, wind up at the post-target level, which is serving as support. So we do the draw for that, and that draw for that gives you a target there, which you subsequently meet, which means you've now made, again, on returns, an entry down here. This is at the latest. We are often in before the just-in-time, but I'm just going to put it as a just-in-time event. When we see HVF's forms, we're often in as not much after the orange line, the orange dotted line that you see here, for example. But, let's keep it chill and just say we're entering on the just-in-time event. Now, what you end up seeing is you have a final high up top here, and you can see you came down, you supported on this blue line. I'll explain why it's there in a minute. That you made a little bit higher move up. Again, you're making the top side of this broadening structure, as you did here, 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 here. You're getting slammed harder down, and you're supporting in the funnel, which is quite typical of what happens. Funnel-based support. There's the funnel. Over there, we can go a bit thicker, actually. Go that cokey. So you're getting some support there. You get a weaker rally you get a weaker rally, which is in the form of a rising wedge. You now have an interaction with the 42.35. You see that neckline. You have another interaction with the 42.35. You may now notice that that has occurred. Left. Yes, you heard it. Head. And then a rising wedge. Right shoulder like that. The entry, if you were a shorter, which I am not in the precious bull market on low time frames, most certainly not, you could have entered over there. And you would have got the benefits. Now, you always have to break funnels with momentum, and that's why you support it here, and the next time you smash it. And once you smash it, you typically, because you've taken a lot of momentum, you have a pullback rest, and you are resisted there. And as a result, you get further down sell, and you're making that head and shoulders target over there that came projected from that neckline in the blue at 42.35. Further spills to the downside, and you find support, yes, at the funnel of the original HVF1, where this is HVF2, Greek 2, and you're then in a rebound. We see this, and we re-engage with the silver market here. Now we would inspect, having seen it move into profit, another pullback that would probably make a right shoulder, and thereafter you might start a move that sees the break back up. Note how the legacy target all the way through here and the funnel are serving as key levels. The risk stop on the HVF2, this one over here, are all dovetailed on these key events. So as you had a shoulder there on the way back down, so I would anticipate that we will potentially have some resistance, and you see a selling wick here and a selling wick there. Also not noted by many watching right now, because it's not your bag, but you will learn it when you click the link below to see the real value of becoming an HVF method technical analyst and chartist who gets through all the bullshit. No RSIs, no overboughts, no trucks. So I had a woman today, I will continue to utilize the RSA as a fundamental part of my strategy. And I said to her, I'll continue to look out of the back of my pickup truck with the dead cow and tow rope that I've dragged out the river for the cow to tell me which direction the car should turn next. You've got to understand what's the driver and what's the laggard. That is a maths-based formula based on the inputs of the price, the pickup truck, the steering wheel, the driver. You can think the cow that is now dead in its phantom format will be able to inform you and navigate you home, and I'm here to tell you, no, you're the driver. And in the same way, price and volume are your indicators, and patterns are your friends. I will keep carving up this single segment of price behavior for you on the silver market just prior a Fed meeting in a manner that will not utilize any lagging indicators, which are nothing more than mathematical, smoothed mathematical formulas based off price behavior that are retrospective, lagging, and rely entirely on what the price does next to move. And even though you think it gave you early warning, it didn't, it followed. Just like the cow, the carcass of the cow will follow you all the way home, and you'll be the one deciding which corners to make and when to go straight. Anyway, back to the principles. Here you can see the resistance on that dotted line, which is the splitter that I've made thick, which was also amazingly where this rallied up to. The confluence of the splitter, the head and shoulder down move, and the legacy targets, all known as key levels of significance if they are horizontal. The splitter, of course, is not. It's ascending, along with what is called an ascending megaphone on a bull pole, which actually is a point of tiring and is not a time for most people to wail in near highs, like up top there or anywhere along. But you say you bought. Yes, we bought after we saw the support on the funnel and the bounce off the basing ascending grind line of that same megaphone at the bottom end of the range, seeing it as a low risk entry for a stop right there in orange, right there. Both these numbers, by the way, substantially more than the cost of joining our community, where you also have payments, a 14-day money-back guarantee. And the goal is not to see it as an expense, but an investment for which you should get an absolute multiple for putting out. Rather than the gold ounces you might have bought with it, the gold ounces you intend and will earn as a result well beyond the amount. Anyway, back to that. It is resisting probably at the splitter, and I suspect that we may get some form of a pullback. Should it show any really big momentum to the downside that makes me uncomfortable like that, I will be quick tactically, because I'm on the screens, to take a smaller and lesser profit rather than the unnecessary loss. However, if it survives as it has so far, with the profit level it is, and it has that small dip and then continues a breakout structure there to the upside, we could find ourselves in the upper half of, once again, the broadening structure, and I may take a tactical profit at that point. Why? Well, because a broadening ascending structure only fixes itself in a number of ways. It'll either return down here and break this and be bearish, which is indeed possible at some point. However, it can also go and make secondary highs and do what we refer to as squaring up and calming down, whereby it shakes out that broadening structure and goes into a constriction type structure, which could set up. It's one of a number of possibilities. And given our take and our overall bull bias and the upside target we still have for gold at 3,768, we also expect, therefore, that silver will probably have some upside too of its own in movement in sympathy with gold's expected upside, despite what the chief satans of the money lending Pharisees decide to do later on today. There you go. That is trading with HVF method with yours truly, the market sniper, Francis Hunt. 2 HVFs, to a secondary one just beyond the target, a head and shoulders, a revisit to the top end of the broadening structure, an entry after proven support, and a rebound from the funnel and at the base of the basing ascending grind line. That means along the bottom and ascending, and a grind line, not a trend. Please note, we adapt and have built on technical analysis to give correct phraseology that breaks different structures right down to the atomic level, which includes the capping ascending grind line and the splitter, that all in their separate owned atomic level, when combined, give you the ascending megaphone. None of this theory is available anywhere else in the world, because it was written by yours truly, me, as someone who really cares about price behavior and spent a lot of time in extreme focus and observation of price behavior and how it serves in the process of developing HVF method. You too can develop this level of skill. It's a totally transferable skill. You might even be a better operator of the method. The genius is in the method, not in me. You might even be a better operator and transcend your financial accounts immensely. You should click the link below and enjoy. Watch out now. This is not a general bull call for silver. Broadly, we expect it to still approach the 45 to 50s range as gold gets its chance to do 3,768. And for that to happen, it might require it to horizontalize. That means trading inside the range, the defined range of its last high and its last low, which could take many different forms. As I've already mentioned, a tightening of the volatility. It could trade in a ledge from edge to edge. It could even form a falling wedge and head down. It could form a continuation of the broadening structure and go marginally higher all the way up to here and sell off again. Either way, because I'm around and I'm able to tactically trade, I will take off if I feel threatened in any way with regards to the profits made since that entry. You too can do this. Click the link below. Decide, do I want to really get charting? Or am I going to chase some RSI, some overbought, some MACD, some mass formula that is a squeeze and rinse through the price data that is put into it, and forget that the truck is driven by the driver, not the cow carcass that's being dragged out of the river. You can decide which kind of guy you want to be. What's your level? What level do you want to be at? What level do you want to play at? The only things that are predictive and lead are volume, price itself when in pattern formations. By the way, third final point, let me actually make this one before I go. I wasn't going to give it to you, but I will. We also talk about the 3 waves of selling when this occurred. One wave of selling instantly gave birth to the rising wedge here, and also that rising wedge, as I've already explained, gave rise to the right shoulder on the head and shoulder that we've already given you. Yes, over there. When you get the continuation pattern for the bear trend, you get the second wave of selling. We explained to you many times why selling often comes in 3s. There's wave 2, and here was the final wave 3. What happened after wave 2? You got this flag-like rally into the funnel that you'd just broken with momentum, that nobody would have had on their chart unless you were an HVF trader, which no one else can teach you because it's mine. And it's developed by me, it's asserted by me, it's copyrighted by me, and I'm the guy that recorded all the learning materials, and it's only available in my site. So that's what you're missing by not knowing. And it's quite typical. You break with momentum. The first time you sort, you knock on the door, and then you kick it down. That's how it happens. And then you rally back into it, into a return move. This entire space and price zone was critical. Then you get your third and final sell-off, and you are supporting then at the next funnel. 3 waves in a sell-off, 2 rallies in between. Yes, that's how it works. Until next time, I hope you learned something from today. Imagine how much you're not learning by not being in there. Imagine how you could be maximizing this gold and silver move and others, including miners and other things that we are both long and aggressively short. The crisis is, in fact, a huge opportunity if you know how to exploit it to build wealth, secure that wealth, so that it cannot be taken from you by overreaching totalitarian governments, and then buy and purchase for yourself real optionality throughout this planet for places to live that are outside of the West, that where you can be expected to maintain and hold on to your wealth, quality of life, and have a greater degree of freedom. If that makes any sense to you, you know what to do. Till next time, bye-bye.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.